Hello and welcome to TMTV News. I'm John Cumming, editor of the Northern Miner. This week we bring you an interview with Mickey Fulp, the Mercenary Geologist. Mining Markets editor Alicia Hyatt catches up with the newsletter writer at the recent Cambridge House Investment Conference in Toronto and gets his optimistic take on the junior resource sector. Mickey also explains why he sees a continuation of the 10-year bull market for gold.
The markets have been very volatile over the past few months, and they've been on a downward trend since March or April. What do you see happening going forward?
I think we kind of predicted this at the PDAC the last time we got together and talked, that commonly sell-offs happen after the PDAC. So I think what we saw was the pros came in and sold post-PDAC. There was a lot of paper that became free trading, say, between March and May. And then we had the sell in May, go away philosophy, so that exacerbated the situation. And then we've had a summer of turmoil in the markets with many panics and debt crises and the U.S.'s inability to deal legitimately with its debt ceiling. And combined with the summer doldrums, it's all added on, and it's very much affected the junior resource market. What do I see ahead? I actually see better times for the junior resource market.
How has your portfolio fared during the past summer?
Probably like everybody's, it's taken quite a hit, but I'm still up on all the stocks because we employ this contrarian philosophy of getting in when stocks are completely unwanted. So all in all, yes, I'm down on paper, but I haven't really sold anything. So you don't record a profit or a loss till you sell. Now what I've done over the summer is put in stink bids for fundamentally strong companies that I like, that I know will have better days ahead, or I surmise will have better days ahead. So for instance, I've been buying uranium companies on weakness all summer long. And with the recent attempt by Cameco to take out Hathor, well, some of those peripheral players to that story I bought during the summer, and so those are looking very good right now.
Are there any other commodities you're looking at right now in particular aside from uranium?
Well, I kind of tended to get out of the gold business, the gold sector, in the first quarter of the year, at least for the companies I covered. I had some core positions. I didn't really sell those core positions, but I figured they weren't going to move for a while. So I moved from what looked like a very overbought gold sector in the first quarter, and that proved to be a smart move because we've seen the advanced gold explorers really take it in the chin post-March PDAC.
So do you see some of the stocks of the gold producers catching up to the rise in the gold price?
Well, I think the gold producers they are catching up. Now, gold's been very volatile. If you look at gold over the last month or 6 weeks, let's say, it made the run up above 1900 and now it's undergone this daily correction that we're seeing right now. Who knows what's going to happen tomorrow? It's very volatile. What we have seen is profit margins increase amongst the gold producers, so their share prices have escalated. The sector that hasn't really participated for the most part are the advanced explorers, and when they catch up, or if they're going to catch up, I think eventually they will. When that's going to happen, I have no idea. I will tell you that a couple of advanced gold explorers that I own have bucked the market trend and are setting all-time highs or near all-time highs right now. So to me, it looks like individual stocks with good fundamentals and good deposits can kind of rise above the crowd. They get their news out. So I think you need to be cautious and you need to pick fundamentally strong companies.
What about the gold price itself? Do you think it has room to move higher at this point?
Well, look at a chart of since 2001, and we're on a constant upward tick in gold with these corrections and perturbations. So do I think the gold price will be higher a year from now than it is right now? Likely. Do I think it's going to jump up immediately, or are we looking at a correction? I have no idea. It's a very volatile market, but it looks to me like we're in a continuing bull market for gold. It's a rush to inflate currencies worldwide, or if you want to look at it another way, to devalue currencies worldwide. So gold is the one thing that is real money. So all these fiat currencies are being devalued. Therefore, the price of gold and all currencies should increase.
Thanks for watching, and see you next time.